Time now for a check of the top business news stories. Kate Moody is here. Hi there, Kate. Now, we were talking yesterday about those measures announced by the president, the curfew coming into effect in a number of French cities. Today, let's look at the financial impact and what the government's doing to help those who are going to be most affected.
Yeah, well, we heard a lot more details from the government as the French Prime Minister confirmed those details. The government has already spent 470 billion euros on its emergency support programs this year alone. That figure is going to rise now as more aid for business owners, workers and households come into effect. Speaking alongside the Prime Minister this afternoon, Finance Minister Bruno Le Maire said that everything that could be done would be. Ellen Gainsford has more.
With strict new measures on their way to slow the spread of the pandemic in France, the French government is keen to assure business owners they'll get the support they need.
Depuis le début de cette crise, nous avons été aux côtés des entrepreneurs comme des salariés touchés par la crise économique et par les règles de sécurité sanitaire. Et nous continuerons à l'être après l'annonce de ce couvre-feu.
Top of the list of new measures, the state-sponsored furlough programme is to be extended. Workers in the worst affected industries will continue to receive 84% of their wages, or 100% if they're on minimum wage. The Solidarity Fund for businesses will be beefed up and made more accessible. Businesses in any sector with fewer than 50 employees who've lost more than 50% in revenues in comparison to the same period in 2019 will get up to €1,500, while those in the hardest hit areas, including hotels and restaurants, can apply for up to €10,000 a month from the Solidarity Fund if they've lost half of their revenues. Social charges are being dropped for some businesses ordered to close during the curfew. The state-backed loan scheme is being extended for 6 more months. And direct loans from the government will be made available to the companies that are struggling the most until next June. It's a €1 billion package the French government hopes will keep businesses afloat for the duration of the curfew period and stave off a wave of bankruptcies and layoffs.
France and the Netherlands are calling for stricter regulations to oversee big tech companies. The Financial Times and CNBC say the countries are sending a joint position paper to the European Commission, which calls for swifter action on a joint framework. The document reportedly floats the possibility of breaking up major firms like Apple, Google and Facebook if they're found to have too much power. France's Minister for Digital Transition said the EU had a historic window of opportunity to address regulation and technological sovereignty. Tech companies are facing growing scrutiny across the globe, and whether or not the Franco-Dutch suggestions are implemented, analysts say that the industry is likely facing a turning point.
These corporations are going to be broken up and regulated. It's happening all over the world. That House report is, it's the latest in a series of reports that have come out from regulators all over the world, everywhere from Australia to Singapore to Israel to England to France. These guys are too powerful. Everybody knows it. There are a lot of different questions about how to regulate them or what to do, but there's going to be a lot that's going to happen to make these corporations safe for democracy.
The number of Americans seeking unemployment benefits rose sharply last week to its highest level since mid-August. The Department of Labor recorded just under 900,000 new applications. That's 50,000 more than the previous week. More than 370,000 additional people applied for support under the separate pandemic program, which covers the self-employed and gig economy workers. Data suggests that many more people are dropping out of the workforce, and real unemployment could remain elevated for the medium to long term. Analysts say the labor market's summer recovery is fading faster than expected as employers hold out for further financial aid from the government. Congress, though, remains deadlocked over another stimulus program to help businesses and households. Let's check in on the day's trading action now. Wall Street's trending lower for the third session in a row as that stimulus impasse worries investors. The Nasdaq down about 0.8% this hour. The Dow Jones and S&P 500 slightly less. Morgan Stanley shares, meanwhile, are trading up about 2% higher after the investment bank beat expectations with a 25% increase in third quarter profits compared to last year. Earlier, the major European indices closed sharply lower, losses of between 2 and nearly 3% there. London's FTSE 100 a bit less. travel stocks slipped as more European countries tightened their restrictions on movement. The hotel chain Accor saw its shares drop 5% here in Paris. Well, airlines have already been dealing with a massive slump in passenger numbers. The low-cost airline Ryanair is now cutting back its winter schedule even further. The airline now plans to run just 40% of its flights, down from 60% previously announced. It says that recent changes to travel rules have led to materially weaker bookings in November and December. Ryanair is also closing its bases in Cork, Shannon and Toulouse, at least for the coming months. Tom, we don't know if or when those might reopen, but we know that Ryanair, like low-cost carriers and airlines around the world, facing a very, very challenging holiday season coming up.
Yes, indeed. Very tough times for the sector. Thank you very much indeed. Our business editor, Kate Moody. Thank you very much indeed.